What's up, accounting enthusiasts? Welcome to another episode of the Live Benefits series, a podcast designed for you in your journey towards being an accountant. I am Vince, your host for today. Hold on because we will be discussing Chapter 2, which talks about the premium liability involving coupon offer. Are you ready? Because I am. So sit back, relax, and let's learn together. To kickstart our discussion, let's take a look at our learning objectives first. Our first objective is to know the recognition of a premium liability. Second is to know the recognition of coupons for free product. Third, to know the recognition of coupons for discount. Fourth, to know the recognition of coupons for rebates. And lastly, to understand the recognition and measurement of a customer loyalty program. So, since we are talking of premiums liability in this episode, first, I think it is important for you to know the definition of premiums na pag-uusapan natin today. It says here that premiums are articles of value such as toys, dishes, silverware, and other goods given to customers as a result of past sales or sales promotion activities. Ibig sabihin, premiums are asset from the issuing entity such as mga laruan, pinggan, silverware such as knives, forks, and spoons or other goods na tulad ng mga damit or tumbler na ibinibigay sa customers dahil bumili sila before or dahil gusto ng issuing entity na makainganyo ng mga customers. I believe we are already aware of these premiums na tinatawag natin kasi kahit nung mga bata pa tayo, purchaser na talaga tayo ng mga goods na may kasamang premiums. Just like the Happy Meals na McDo, di ba? Or yung mga kiddie meals sa Jollibee na may kasamang laruan sa loob. Also, included dito yung mga laruan na nakalagay sa loob ng mga chichirya before na tig-pipiso if naabutan nyo yun. Like, most of the time, ayun lang yung habol ko sa kanila. Then, tinatapon ko na yung chichirya after ko makuha yung laruan inside. Those are few examples of premiums. But, in this chapter, hindi sila yung premiums na pag-uusapan natin because those examples that I gave you are premiums na binibigay at the point of sale. Di ba yung sa kiddie meal, pagkabili mo ng food, included na yung toys. Therefore, they are already a reduction on the asset part of Jollibee. But, since we are talking of premiums liability here, kailangan yung premiums are not a reduction on the total assets but a liability in the part of the issuing entity. So, kailan siya nangyayari? It happens when the premiums are given in return for product labels, backstops, wrappers, and coupons, just like what is stated here sa PPT. An example of this ay yung mga t-shirt na makukuha lamang ng mga retailers ng sigarilyo once makakapagbalik sila ng certain number ng mga kaha ng sigarilyo. In this case, nagiging liability ng issuing entity yung premiums because the customers need to accumulate certain amount of product labels, backstops, mga pinagbalatan or coupons first before maibigay yung premiums. And although hindi pa certain yung time kung kailan mag-claim ng premiums yung customers, under the matching principle, we need to properly match the amount of expense na may incur natin with regard to those premium na mare-release since nakabenta nga tayo or nag-generate tayo ng sales. Hence, we recognize the premiums liability at the end of the period for the amount of the premiums na estimated nating makiklaim ng customers na pinagbentahan natin. Now, let's take a look at these journal entries relating to the premiums liability. The first entry is the one that we use to record the purchase of the premiums. So of course, to record the increase in premiums, we will debit the premiums account because it is an asset with a credit to cash if it is bought in cash. The next journal entry naman is the one that we use to record the distribution of premiums to the customers or kapag na-claim na ng customers directly yung premiums from the issuing entity. So, it includes a debit to premiums expense and a credit to the premiums account para mabawasan na yung asset. And at the end of the year, if yung premiums are still outstanding or hindi pa nakiklaim ng customers, we will use a liability account to properly match our premium expense for the sale that we generated at that certain accounting period. So, again, we will debit the premiums expense account, but this time, we will credit the estimated premium liability. Take note that it is just an estimate, okay? And now, to further understand the lesson, let's have this illustration. An entity manufactures a certain product and sells it at 300 pesos per unit. A soup bowl is offered to customers on the return of 5 wrappers plus a remittance of 10 pesos. The bowl costs 50 pesos and it is estimated that 60% of the wrappers will be redeemed. The data for the first year concerning the premium plan are summarized below. Sales 10,000 units at 300 pesos each, 3 million. Soup bowls purchased 2,000 units at 50 pesos each is equal to 100,000. Wrappers redeemed 4,000. If you want to answer this problem, feel free to pause this video and play nyo na lang ulit after nyo magsagot. Now here are the related journal entries assuming that we are the entity. First, we need to record our sales, and for that, we are going to debit cash for 3 million and credit the sales account for 3 million as well because we sold 10,000 units at 300 pesos each. Next, we need to record the purchase of the premiums, and for that, we are going to debit the premiums soup bowl account. Notice that the kind of the premium is specified, alright, for 100,000 and a credit to cash of 100,000 as well. Next, we are now going to account for the redemption of 4,000 wrappers, and here we have a debit for cash of 8,000. We know that each soup bowl remittance has an additional cost of 10 pesos, which is why we have 10 pesos here. But how did we get that 800 pesos? It is by dividing 4,000 coupons with 5 since it is stated in the problem that one soup bowl is equal to 5 wrappers. So 800 times 10 is equal to 8,000. Next, we need a debit to premiums expense account to recognize the expense for premiums redeemed. And here we have a debit of 32,000, and as you can see, we already know why we have 800 here, but how did we get the 40 pesos? It is from the difference of 50 pesos, which is the cost of the bowl, and the 10 pesos that was paid by the customer for the redemption of the wrappers. So 800 times 40 is 32,000. And lastly, we have a credit to the asset account here because the redemption of wrappers means the issuance of the premiums, and therefore we need to decrease it. And for that, we have a credit of 40,000 for soup bowls, which is the cost of the bowl as stated in the given problem. And lastly, we are now going to record the liability of the premiums at the end of the first year. And here we have a debit to premiums expense for 16,000 and the credit to estimated premium liability for 16,000 as well. We arrive in this figure by considering the given that an estimate of 60% of the wrappers will be redeemed. So 60% of 10,000 is equal to 6,000. But since 4,000 wrappers have been already redeemed, we will deduct that to 6,000, so we will get 2,000 wrappers outstanding. And since 5 wrappers are needed to get one soup bowl, we will divide the 2,000 wrappers by 5, and from that we will get 400 premiums to be distributed. We just need to multiply the 400 pieces of premiums to 40, and then we will arrive at 16,000 pesos. Let us now discuss the free product, discount, and rebate. So, in a contract of sale of goods, an entity may offer customer incentives such as free product coupons, discount coupons, and rebate coupons. This is just like the premiums that we discussed a while ago in a sense that they are given by the issuing entity to generate or stimulate sales. Under IFRS 15, paragraph 22, at contract inception, an entity shall assess the goods promised in a contract with the customer and shall identify as a performance obligation each promise to transfer the customer either A distinct good, B, a series of distinct goods that are substantially the same and that have the same pattern of transfer to the customer. Meaning, whenever a contract of sale is perfected, dapat i-treat ng entity as a performance obligation yung bawat promise niya sa customer na mag-transfer ng distinct good or series of distinct goods that are substantially the same and that have the same pattern of transfer. Kasi under the paragraph B40, such options to purchase additional goods provide the customer a material right and therefore gives rise to a performance obligation that the seller must satisfy. Also, if you can remember, this is a constructive obligation din kasi kung saan inobliga ng entity yung sarili niya at umasa naman yung mga third party na i-fulfill yon ng entity. In addition, if the options provide a material right to the customer, hindi para na rin nagbayad yung customer sa seller for future delivery of additional goods. Kaso, in advance nga lang. Now, accordingly, the entity has two performance obligations in these customer options. Namely, 1. To deliver or transfer the goods or products sold. 2. To satisfy the customer options for coupons for free product, discount, and rebate. And under IFRS 15, Paragraph 74, an entity is required to allocate the transaction price of goods sold between the product sold and the customer options based on relative standalone selling price. Ibig sabihin, yung mga proceeds na matatanggap ng entity from the sale of goods na may kasamang customer options ay dapat daw hatiin between the price of the product sold and the customer option ng magkahiwalay, na para bang binenta sila ng hindi magkasama. Now, i-discuss naman natin yung free product coupons, yung discount coupon, and rebate coupons individually. The first one on our list is the free product coupons. These are coupons that entitle the customers to an additional piece of product if they bought a required quantity of such product. Meaning, ito yung mga coupon na nagbibigay ng rights sa customers na makakuha ng additional piece of the product na binili niya if mamimit niya yung required na dami ng purchase na niset ng entity for that product. Now, since we need to allocate the transaction price between the product sold and the price of the coupons based on their standalone selling price, it is important to remember that the standalone selling price of these coupons is equal to the selling price of the pre-product adjusted by the expected redemption. Now, let's have an example. An entity sells shelf organizers for 1,500 each. There is a promotion wherein if a customer buys 3 pieces in a single transaction, customer receives a coupon for 1 additional piece for free. During 2021, the entity sold 1,800 pieces or an equivalent of 600 free additional pieces. The selling price of the product sold is 1,800 multiplied by 1,500 or 2,700,000. It is expected that 75 of these coupons will be redeemed. During 2022, the entity delivered 150 free additional pieces to the customer. So, para makapag-record tayo ng related journal entries, we need to find the standalone selling price of coupons first. And again, the standalone selling price of these coupons is equal to the selling price of the free product adjusted by the expected redemption. So, first we need to get the number of the additional product which is already given. The 600 free additional pieces na nabanggit sa problem. Or we can also divide the 1,800 by 3 because 3 pieces ang kailangan to receive a coupon for 1 additional piece. So 1,800 divided by 3 is 600. Now, multiply naman natin siya sa actual selling price of the shelf which is 1,500 kasi that is the price of each additional piece. And from that, we will get the selling price of the pre-products worth 900,000. We just need to multiply this figure from the expected redemption of the entity, which is 75%, and from that, we will get the standalone selling price of coupons worth 675,000 pesos. And now, dahil may standalone selling price na tayo ng coupons, we can now allocate the transaction price accordingly. To allocate, we just need to make this table of 4 columns. So first column ay ilalagay natin yung dalawa na maghahati, the product sold and the coupons. The next column naman ay yung standalone selling price nilang dalawa, kasama syempre yung sum nila sa ibaba. Here we have 2,700,000 for the price of the product sold. Kasi if you can remember, they sold 1,800 pieces of shelves and each shelf cost 1,500 pesos. So 1,800 times 1,500 is equal to 2,700,000. We also have the 675 here, and again, ito yung na-compute natin kanina as shown dito sa table sa itaas. The next column naman ay para sa fraction ng dalawa. We can get their fraction by dividing their standalone selling price by the sum of the two figures. So to simplify, for the product sold, it is 2,700 divided by 3,375, and for the coupons that is 675 divided by 3,375. Now, after getting their fraction, we can now proceed with the actual allocation of the two from the transaction price. So for the product sold, we just need to multiply its fraction by 2,700,000 and we will get 2,160,000. And for the coupons, we just need to multiply its fraction and multiply it by 2,700,000 as well. And from that, we will get 540,000. So to check, we can add 2,160,000 and 540,000 and their sum must equal to 2,700,000, which is the transaction price. And because we are done allocating the transaction price, we can now prepare the following journal entries. First, to record the sales for 2021, we will debit cash for 2,700,000 since it is what we have received in total. Credit sales for 2,160,000 dahil yun po yung allocated price na na-compute natin kanina. Together with the credit to the deferred revenue for the coupons worth 540,000 na na-compute din natin kanina from allocation. Please remember na we use the deferred revenue here kasi kagaya nga ng sinabi ko kanina, the payment for these options are like advance payments for future delivery mula sa customers. So, habang hindi pa siya delivered, it is still a liability and will only be recognized as revenue kapag delivered na. Therefore, in 2022, if 150 free products are delivered, we will debit the deferred revenue for coupons worth 135,000 and credit the sales for 135,000 to recognize the revenue for such delivery. Now, how did we get the 135,000? We just need to get the fraction of 150 free products over the 600 free additional products to be delivered and multiply it by 540,000 to get the 135,000. Let's talk about discount coupons. Discount coupons are those that entitle customers to a certain percentage of discount on future purchases upon meeting certain purchase requirements. Meaning, these are coupons that will reduce the total amount of purchases to be paid by the customers in the future upon meeting the required purchase price of the issuing entity. And again, since we need to allocate the transaction price between the price of the product sold and the price of the coupons based on their standalone selling price, it is important to note that yung standalone selling price naman of the discount coupons is equal to the amount of the discount on future purchases adjusted by the expected redemption. And para mas maintindihan natin, let's have this illustration. An entity is a retailer that sells clothing. The entity has launched a promotional campaign wherein customers who buy clothing with single purchases of at least 10,000 shall be granted 40% discount coupons on future purchases. The coupons may be used for 3 months following immediately the campaign. During the campaign, the entity sold clothing worth 7,600,000 and issued simultaneously 140% discount coupons to the customers. It is expected that 80% of the coupons will be redeemed and the customers using the discount coupons will spend an average price of 12,500. So for this, we also need to find the standalone selling price of the coupons first. So let's proceed with the next slide. Again, the standalone selling price of discount coupons is equal to the amount of discount on future purchases adjusted by the expected redemption. So, we need to get the total amount of discount on future purchases first. And we can do that by getting the average of future purchases, which is already given, or 12,500, and multiply it by the number of discount coupons, which is 100. After that, we will arrive at 1,250,000, which is the total amount of future purchases, and we just need to multiply it by the percentage of discount, which is 40%, based on the given problem. After that, we will arrive at the total discount on future purchases, which is 500,000, and from that, we just need to get the expected redemption of the entity, which in our case is 80%. So, 500,000 times 80% is equal to the standalone selling price of the coupons worth 400,000. And because we now have the standalone selling price of the coupons, we can now proceed with the allocation of the transaction price accordingly. Just like how we allocated the transaction price for 3 additional products, we'll just use this table of 4 columns. So here we have 7,600,000 of the standalone selling price for the products sold because it is the amount of cash we have received from the sale of clothing. The 400,000 is here as well and we have already computed for that. And their sum is 8 million. To get the allocated price of the product sold, we just need to divide 76 by 80 and multiply it by the 7,600,000. We will get 7,220,000. And to get the allocated price of the coupons, we just need to divide 4 by 80 and multiply it by 7,600,000. To check if our allocation is right, we just need to add both the allocated price and if it totaled to the transaction price, then it means our allocation is substantially correct. Now we can finally record the following journal entries. So to record the sales, we will debit cash for 7,600,000, credit sales for 7,220,000, which is yung allocated price na na-compute natin kanina, and yung deferred revenue for coupons for 380,000 na na-compute din natin kanina. And to record the redemption of coupons naman, we just need to debit cash for 600,000. But how did we get that? Well, first, we need to compute for the total amount of future purchases, which is 1,250,000. Dahil nga, 12,500 yung average price ng bibilhin ng bawat customers in the future, and we have 100 customers na binigyan ng coupons. So, 12,500 times 100 is equal to 1,250,000. But we need to deduct 40% on that pa kasi nag-promise nga tayo na bibigyan natin sila ng 40% less. So, less 40% pa yan, which is 500,000. That will give us 750,000 of net price. Pwede na sa atin to ilagay sa cash. However, sa given problem kasi, it is expected na 80% lang daw ang mariredeem na coupons. So, we need to multiply the 750,000 to 80% and that will give us the amount of cash na marireceive natin from customers. So, debit cash for 600,000 and now we just need to debit the deferred revenue for coupons na 380,000 which is yung allocated price niya na na-compute natin kasi nga na-redeem na sila and credit the sales for 980,000 to recognize our revenue from redemption. Let's now discuss the rebate coupons. Rebate coupons are those na nag-a-arise naman kapag yung manufacturers ng product ay nagbibigay ng discount sa customers if they purchase the same product from the retailers in the future. So, since nababawasan na ng discount yung kikitain ng retailers dahil sila yung tatanggap ng bayad ng customers, nagkakaroon ng liability yung manufacturers sa kanila for the price of the product na hindi nabayaran ng customers. So, this is what we call the refund or rebate liability. And nababawasan lang siya kapag na-reimburse na ng manufacturers yung retailers. So, under the IFRS 15, paragraph 70, the transaction price received by the manufacturers shall be allocated between the product sold and the rebate liability based on the relative standalone selling price. And the standalone selling price of the rebate coupon is equal to the discount on the product sold during the year adjusted by the expected redemption. Now, para mas maintindihan natin siya, let's have this illustration. An entity is a manufacturer and sells its product to local retailers. Retailers sell the product to its customers, and for each product purchased by the customers, a coupon of 50 pesos discount is given and may be used on future purchase of the same product. Retailers are reimbursed for the discount by the manufacturer. During the current year, the manufacturer sold 30,000 products to the retailers at 150 pesos each product, or 4,500,000. It is expected that 75% of the coupons will be redeemed. At year-end, the manufacturer paid the retailer 200,000 as reimbursement. Now, just like other coupons, para makapag-record tayo ng related journal entries, we need to find the standalone selling price of the rebate coupons first. And again, the standalone selling price of the rebate coupon is equal to the discount on the product sold during the year adjusted by the expected redemption. So, let's get the number of the product sold first, which is 30,000, and multiply it by the discount, which is 50 based on the given. So, the total amount of discount here is 1,500,000, and we just need to multiply it by the expected redemption, which in our example is 75%. Therefore, we got the standalone selling price of the rebate coupons, which is 1,125,000. Now, since may standalone selling price na tayo ulit, proceed naman tayo sa allocation ng transaction price. For the standalone selling price of the product sold, we just need to multiply 30,000 by 150 because the entity sold 30,000 products to retailers for 150 pesos each. Hence, we got 4,500,000 here. And for the rebate coupons, input lang natin yung na-compute natin kanina, which is 1,125,000, and get the sum of the two figures para makapag-proceed na tayo sa fraction nila. So, para makuha ang allocated price ng product sold, divide lang natin yung 4,500 sa 5,625 and multiply it by the transaction price, which is 4,500. And para naman makuha natin yung allocated price ng rebate coupons, divide lang natin si 1,125,000 by 5,625,000 and multiply it by 4,500,000. And ayan, kung gusto natin i-check is need lang natin i-add yung dalawang allocated price, and if their sum is equal to the transaction price, then probably tama yung allocation natin. At dahil may allocated price na tayo, we can now proceed with the preparation of the journal entries. So to record the sales to the retailers, we just need to debit cash for 4,500,000, credit sales for 3,600,000, and credit the rebate liability for 900,000. Now to record the reimbursement to retailers naman, I just need to debit the rebate liability for 200,000 and credit the cash for 200,000 as well kasi ayun yung amount na binayad natin sa manufacturers to reimburse the retailers based on the given. And now, mag-proceed naman tayo sa gift certificates. These kinds of certificates are very common to department stores like SM kung saan napakaraming goods yung pwedeng i-avail ng customers. And as we all know, customers buy certificate gifts in exchange for future delivery of goods, and most of the time, ito talagang binibigay ng mga yayamanin na ninong at ninang kapag Pasko na ayaw ma-stress kung ano yung regalo nila sa mga inaanak nila. Kasi when you buy gift certificates, you are entitled to goods from the issuing entity na nagkakahalaga lang syempre ng gift certificate na hawak mo. Like for example, you have 5,000 pesos worth of gift certificate. You can avail yourself of goods from that department store pero hanggang 5,000 pesos lang. So, nagiging liability talaga siya ng issuing entity and magiging revenue lang kapag na-redeem na. However, hindi naman lahat ng gift certificates ay nare-redeem in real life because sometimes nawawala yung certificate evidencing your claim or minsan lumalagpas na sa redemption date. So, under IFRS 15, the non-redemption of the gift certificates is referred to as the breakage. And the breakage revenue is equal to the proportion of the value of certificates redeemed to the expected value of the certificates to be redeemed multiplied by the expected value of breakage. But para mas maintindihan natin, let's have this example. During the current year, an entity sold gift certificates worth 5 million to customers in exchange for future delivery of its product. The gift certificates are non-refundable, and the entity expects that 10% of the certificates will not be redeemed. The entity redeemed gift certificates worth 1,800,000 during the current year. Again, feel free to pause this video if you want to answer, and let's see in the next slides if your answer is correct. In this problem, we only need to find how much is the breakage revenue. But just to reiterate, the breakage revenue is equal to the proportion of the value of certificates redeemed to the expected value of the certificates to be redeemed, multiplied by the expected value of breakage. So, first we need to find the value of certificates redeemed, which in our example is worth 1,800,000. Next is to find the expected value of certificates to be redeemed, which is the residual lang after natin malaman kung ilang percent ang breakage. So, kung 10% ang expected natin na hindi mariredeem, then 90% of them will be redeemed. Hence, 5 million is multiplied by 90%, and that equals to 4,500,000. And lastly, we need to find the expected value of the breakage. In the given problem, that is 10%. So, 5 million is multiplied by 10%, and that gives us 500,000. And now that we have the three values, substitute na lang natin si value of certificates redeemed, which is 1,800,000, divided by the expected value of certificates to be redeemed, which is 4,500,000, and multiply them by the expected value of the breakage, which is 500,000, and that equals to 200,000. And since may value of the breakage na tayo, we can now proceed with the journal entries. So to record the sale of gift certificates, we debit cash for 5 million and credit the liability account, which is the deferred revenue gift certificates for 5 million as well. This 5 million came from the gift certificates sold na given sa problem. Now, to record the value of certificates redeemed, we debit the deferred revenue gift certificates account for 1,800,000, which can also be found sa given, and credit to the sales account for 1,800,000 as well to recognize our revenue. And lastly, to record the breakage revenue, we just need to debit the deferred revenue gift certificates again and credit the breakage revenue to recognize the unredeemed portion of gift certificates worth 200,000 pesos na na-compute natin kanina. Now, let's talk about customer loyalty program. Ito sa pangalan pa lang alam na agad natin kung para saan talaga siya, right? Lahat ng mga entities na gumagamit nito, they intend to strengthen their relationship with their customers and para ma-encourage sila na maging loyal sa brand nila. They are generally designed to reward customers for past purchases and provide them with incentives to make further purchases. And yung pakulo pa nga nila rito is if a customer buys goods or services, the entity grants the customer award credits, often described as points. At usually, customer need to accumulate certain amount of points bago sila makapag-redeem ng mga libre or discounted goods and services sa entity na may pakana ng customer loyalty program na yon. An example of this is the reward system na gumagamit ng reward cards tulad sa SM, Robinson, Mercury Drug at Pandaing Bookshop. I believe ikaw or yung iba sa mga nanonood nito have already availed some of those cards na nabanggit ko kasi ako, I have one. Yung sa Mercury Drug and sa sa Mercury Drug and sa Pandaing Bookshop. Pero hindi ko pa na-try na mag-claim kasi I usually buy in small quantities. Like, madalas naman. Pero ayun, nahihiya ako kasi mag-claim. But those are examples of customer loyalty program. But how do we measure these award credits if tayo yung issuing entity? It says here that an entity shall account for the award credits as a separate component of the initial sale transaction. Meaning, every grant of award credit is treated as a future delivery of goods or services. And in addition, the IFRS 15 paragraph 74 provides that an entity shall allocate the transaction price to each performance obligation identified in a contract on a relative standalone selling price basis. So, katulad lang din ng mga nauna nating na-discuss, since this is a performance obligation, nire-remind tayo ulit na dapat nating i-allocate yung fair value na consideration na mare-receive natin between the product sold and the award credits. Kaya inulit-ulit dito yung definition ng standalone selling price, which is the price at which an entity would sell a promised goods or service separately to a customer. Now, when it comes to recognition, it says here that the consideration allocated to the award credits is initially recognized as deferred revenue and subsequently recognized as revenue when the award credits are redeemed. So, just like the coupons kanina, treated as liability muna ang award credits and magiging revenue lang kapag na-redeem na. And of course, the amount of revenue recognized shall be based on the number of the award credits that have been redeemed relative to the total number of expected to be redeemed. Also, we need to remember that the estimated redemption rate is assessed each period, and the changes in the total number expected to be redeemed do not affect the total consideration for the award credits. Meaning, since it is just an accounting estimate, the changes will just be treated currently and prospectively. Therefore, the calculation of revenue to be recognized in any one period is made on a cumulative basis in order to reflect the changes in estimate. And to further reinforce your understanding of this topic, let's have this example. An entity, a grocery retailer, operates a customer loyalty program. The entity grants program members loyalty points when they spend a specified amount on groceries. Program members can redeem the points for further groceries. The points have no expiry date. The sales during 2021 amounted to 9 million based on standalone selling price. During 2021, the customers earned 10,000 points, but management expects that 80% or 8,000 of these points will be redeemed. The standalone selling price of each loyalty point is estimated at 100 pesos. On December 31, 2021, 4,000 points have been redeemed in exchange for groceries. In 2022, the management revised expectations and now expects that 90% or 9,000 points will be redeemed altogether. During 2022, the entity redeemed 4,100 points. In 2023, a further 900 points are redeemed. Management continues to expect that only 9,000 points will ever be redeemed, meaning no more points will be redeemed after 2023. To prepare for the journal entries, kuhain muna natin ulit yung allocation ng product sales at standalone selling price ng points using the table. But this time, diretsuhin na lang natin yung format para mas presentable. So for the product sales, we have 9 million because that is the amount of the sales given during 2021. And 1 million naman for the standalone selling price of the points because 10,000 points were earned by customers in 2021 and each point costs 100 pesos. So 9 million plus 1 million is equal to 10 million. And now we can get their fraction to arrive at their allocation price. So for product sales, we just have to divide 9 million by 10 million and multiply it by 9 million, which is the transaction price, and we will get 8,100,000. For the reward points naman, same process lang din. We will divide 1 million by 10 million first, then multiply it by 9 million to get 900,000. So to check 8,100,000 plus 900,000, that is 9 million, and now we can proceed to the recording of journal entries. To record the initial sale in 2021, we will debit cash for 9 million and credit sales for 8.1 million, and credit unearned revenue points for 900,000. Now, to record the redemption of 4,000 points in 2021, we must calculate for the amount of revenue first, and makukuha natin yun by dividing the points redeemed by the expected points to be redeemed, which in our example is 8,000, and multiplying the quotient by the allocated price of the award points. Hence, 4,000 divided by 8,000 multiplied by 900,000 is equal to 450,000 worth of revenue to be recognized in 2021. So to record this, simply debit the unearned revenue points account and credit the sales account both for 450,000 to recognize the sale. Ngayon, paano naman natin i-record yung redemption ng 4,100 points in 2022? Kung sabi sa problem is, hindi na pala 8,000 yung expected points to be redeemed, but 9,000 na pala. Ganito lang yan. Just like what I said kanina, the change in accounting estimate will not affect the total consideration for the award credits. Ang gagawin lang natin ay i-consider siya sa computation ng revenue for this period. And magagawa natin yon by finding the total points redeemed on December 31, 2022, which is the sum of the points redeemed in 2021 and 2022. So 4,000 plus 4,100, that will give us 8,100 points to be redeemed this period. Now, ang next step is hanapin naman ang cumulative revenue for 2022, and we can get that by dividing the 8,100 by 9,000 and multiplying the quotient by 900,000. Kaya natin to ginagawa is para makompute natin kung magkano na sa 900,000 ang dapat natin i-recognize as revenue by the year 2022. So, now we have 810,000, but hindi pa yan ang i-record natin kasi if you can still remember, nag-recognize na tayo ng 450,000 in 2021. Kaya, need natin siyang i-minus sa 810,000. From that, mag-a-arrive tayo sa 360,000 and ayan na ang revenue na i-record natin for 2022. Now, to record the redemption of 900 points naman in 2023, we just need to repeat the process in 2022. Kuhain natin ang total points to be redeemed in December 2023, which is the sum of the points redeemed in 2021, 2022, and 2023. After that, makukuha natin ang 9,000 pesos na sagot, and we just need to divide it by 9,000, then multiply to 900,000 para malaman natin kung magkano na ang revenue na dapat natin ma-realize by this period of 2023. And ito na nga, you got 900,000, but tulad ng ginawa natin kanina, i-minus muna natin yung revenue na na-recognize na natin from the preceding periods, and that is 810,000 in total. So, 900,000 minus 810, that will give us 90,000, and that will be the revenue to be recognized in 2023. Pero paano naman kung third party ang magpa-facilitate ng loyalty program ng isang entity? May magbabago kaya sa accounting natin? Let's have an example. An entity, a retailer of electrical goods, participate in a customer loyalty program operated by an airline. The entity grants program members 1 air travel point for every 1,000 spent on electrical goods. Program members can redeem the points for travel with the airline subject to availability. The entity pays the airline 60 pesos for each point. During the current year, the entity sold electrical goods for consideration totaling 4,500,000 based on the standalone selling price and granted 5,000 points with the standalone selling price of 100 pesos per point. To solve for this, we just need to find the allocation of the standalone price of the product sales and the points again in this format. So the selling price of the product sold is 4,500,000 because it is stated in the problem already. And we have 500,000 pesos naman for the points because 5,000 points were granted to customers with the standalone selling price of 100 pesos per point, also given in the problem. Let us now calculate for their allocated price by using their fraction. So for the product sales, to simplify, that is 45 divided by 50 multiplied by 4,500,000, and that will give us 4,050,000. For points naman, that is 5 divided by 50 multiplied by 4,500,000, which is 450,000. And to check, let us add 4,050,000 and 450,000, and that will give us 4,500,000, which means we have allocated based on the total consideration correctly. Now, dahil third party ang nag-operate ng loyalty program, kailangan magbayad ng entity sa airline, and base sa given, nagbabayad daw yung entity ng 60 pesos for each point. Therefore, yung 450,000 na revenue from points is mababawasan pa because they need to pay the airline pa nga. And to calculate for that, we will just multiply the total points granted, which is 5,000 by 60 pesos, and that will give us 300,000 worth of deduction to 450,000. Therefore, our net revenue from points is actually 150,000 pesos only. Now, to answer our question kanina, may magbabago ba if third party yung nag-operate ng customer loyalty program? The answer is yes, because this time, we will recognize the points as revenue immediately since yung third party naman na ang bahala kapag nag-redeem na yung customers. In other words, once mag-grant natin yung points, ay fulfilled na yung obligation natin. So, to record the initial sale, we will debit cash for 4,500,000 para sa total consideration received, and credit sales for 4,050,000 and credit to revenue points, which is 450,000, na parehong allocated price already computed kanina. And to record the payment to airline naman, we just need to debit the loyalty program expense and credit cash for 300,000 kasi nga 60 pesos ang bayad ng entity for each point granted, the entity granted 5,000 in total. So, 5,000 times 60 is equal to 300,000. And that concludes our episode about premium liability coupon offer. If you enjoyed this episode, please like and subscribe so you will be notified when a new episode is posted. Rate and review this podcast and share it with your friends as well. Thank you so much for listening, and we hope that you are able to catch up new lessons that will help you on your accounting journey. Get that CPA title because we believe in you.